Hi there, welcome back. I'm Shelley Aubie, and today we're going to talk about financing your home. So, before you even start looking for a house, you're best to check out with your mortgage lender or broker to discuss your financing options and confirm that you are financially ready to buy a home. They will discuss mortgage terms, interest rates, and will explain to you the must-dos to ensure that you get approval for a mortgage once you find the home that you want. So, you need to get pre-approved. A pre-approval for a mortgage lets you know how much you can afford and what your interest rate will be and what your approximate monthly mortgage payments will be or will look like. Getting this pre-approval can help you narrow down your search to a specific home type, the size, the neighborhood, and the price range that you want. But getting a pre-approval is not a guarantee of a final approval for a mortgage. Once you find the home you want to buy, the property still has to be evaluated to ensure that the price and condition of the home are acceptable to the lender. So what that means is the lender might want an appraiser to go out and check out the property, make sure there's no holes in the walls or no unexpected things that they don't want to secure their name against your property. Okay, so you will have many options when it comes to choosing a mortgage. Your lender or broker will help you find the mortgage that best match your needs. So there are some terms that I want to give you a little heads up on so that when you're talking to your mortgage broker, you feel a little bit educated. There's an amortization period. That is the length of time that you agree to pay off your mortgage. It's generally 25 to 35 years. And the longer the amortization, the less your monthly payment is. So if you want to have your house paid off in 15 years, you can do a 15-year amortization. Your monthly payments will be a little bit higher, but you will have your house paid off quicker. There's a payment schedule. So how often you want to pay your payments. You can do it weekly, every 2 weeks, once a month, or bi-weekly. So, and the quicker or the more often you make your payments, the faster it pays down your mortgage as well, because your interest isn't accumulating as long of a period. So the types of interest rates you can do are fixed rate. So that means that is a fixed rate for the term of your mortgage. So typically mortgages are 1 year, 3 year, 5 year. They do some 10 years as well. Right now, with the interest rates being so low, a 10-year might not be a bad option. But your fixed rate is the rate you will pay for that entire period of the term of the mortgage. Variable rate is an interest rate that fluctuates with the market rate and prime lending rate. So it's usually prime plus a little bit or prime minus a little bit. And that is set for the term of the mortgage. But your payments will be set. But if prime goes up, then you're not paying off as much of your mortgage. And if prime goes down, then your monthly payments, you'll be paying off even more of your mortgage, so off the principal. So that's sort of how it fluctuates with the prime lending rate. If you have more questions, just ask me. I can explain it to you even better in person. Then there's a protected or cap rate variable mortgage. So the rate fluctuates, but will not rise over a preset maximum amount. So you're not going to get as cheap as the variable rate, but at least you're protected if market rates do jump up. Okay, so then there's a mortgage term. So the mortgage term is the length of time you choose to have your rate in effect, so 6 months to 10 years. When the term is up, you can renegotiate your mortgage and choose the same or different options. Then there's open and closed mortgages. So if you're thinking you might only stay in a home for a year or a short period of time, you might want to have an open mortgage because that means that you can pay it off at any time. Whereas a closed mortgage, you can't pay off your mortgage as easily. There's likely going to be penalties to paying off your mortgage early. So that's another point. You want to make sure that your mortgage is portable. In case you're thinking of moving to another home or upgrading your home, if your mortgage is portable, it can be moved from this home to your next home. Conventional and high ratio mortgages. So a conventional mortgage is a loan that is equal to or less than 80% of the lending value of the home. This requires a down payment of at least 20%. So a conventional mortgage is a mortgage where you're putting at least 20% down, and I find that banks quite often will do an appraisal on those because they don't have insurance that you're going to pay that property off. So a high ratio mortgage, on the other hand, is where if you're putting less than 20% down, so 5%, 10, 15, or 20, and at each of those stages, the insurance rate goes up. So you pay a little bit of an insurance premium. It's usually called CMHC insurance or Genworth insurance. And that insurance protects the bank in case you can't pay those payments. So as you would imagine, there's more risk to the bank. So therefore, they get the insurance, but the insurance company is insuring the property. Okay, and you pay for that insurance. It's just like home insurance or car insurance. It's in case. So prepayment options. Oh, I briefly went over that on the last page, but the ability to make extra payments, increase your payments, or pay off your mortgage early without incurring a penalty. So you want to ask what your prepayment options are. And portability, the option that allows you to transfer or switch your mortgage to another home with little or no penalty when you sell your existing home. So the mortgage loan insurance can also be transferred to the new home as well. If you need help finding a mortgage broker, I have some good ones. Just let me know and I'll help you find them. Okay? Anyways, I'm Shelley Aubie, broker with Remax Sonia Realty. And if you like this video, make sure you like and follow my Facebook page, and you'll be kept up to date with different houses I list, sold, helpful tips and tricks like what I've done here today. And anyways, I will talk to you soon. If you need me, 519-381-4549. Have a great day.